The Reserve Bank selling Australia's gold. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at a portion from the Economic Standing Committee and their discussions with the Reserve Bank Governor and other senior members from the Reserve Bank. Now, there's one question that I think a lot of people are interested in. This was asked by the Honourable Dr. Andrew Lee regarding, well, the Reserve Bank's sale of gold quite some time ago and how bad a decision that was. So let's have a listen here to the member's question and the take from the Reserve Bank.
Governor, I wanted to conclude with a final question about what I think must rank as the worst market decision in Reserve Bank history, the decision in 1997 to sell 167 tonnes of gold when the world gold price was $400 an ounce.
So what we'll do is I'll just look up the gold price right now. We'll jump here and we'll see, $400 an ounce. What are we looking at now? There you go, 1,939 an ounce. So, not too smart from our government. Oh, you can't see that. Hang on. You can trust me. There you go.
The gold price is now about 5 times as high, around $2,000 an ounce. So, had Australia held on to that gold, it'd be worth about $9 billion more now than it was back then. Do you acknowledge that, in retrospect, that was a lousy decision? And what will guide your decision in future as to the Reserve Bank's to buy or sell gold?
Perhaps I can ask Guy to answer that, if that's okay.
What your price calculations are completely correct, Andrew. I suppose a couple of points I'd make is the proceeds from that sale generated returns subsequently. So you're correct in terms of if you sold it now, it would have been at a higher price. But in the meantime...
Do you think the proceeds from that sale made $9 billion of return? What was the opportunity cost there? Because here's the thing. This is going to be interesting what Guy tells us with regard to the return that they made on the money as opposed to the gold. Because they're leasing the gold. They're leasing the gold, the 80 tonnes that we have that's sitting over in the Bank of... in the UK, it's getting leased. So they're making money off it, guys. They're making money off it.
That has allowed us to pay a hike from those proceeds. We could, invested them in US Treasuries, which earn a rate of return, unlike gold, which earns a 0 rate of return. And so we earned interest.
Well, no, it doesn't. You're leasing it, aren't you? That makes money. Someone tell me if I'm wrong. We'll have to see. I guess normal people holding gold don't make money. We don't have the capacity to lease it to other parties, but I'm sure the RBA does.
Income in the intervening 20-odd years. It also has allowed us to pay higher dividends to the government. So one way you could think about it in both as a result of the proceeds of the sale, but also the interest income we've earned on those alternative assets that we've held. So you could.
But we need the opportunity cost there of that mistake. Of course they're not going to admit it, but. The concept of an opportunity cost is whenever you make one action or whenever you make one decision, and I'll bring that down here for a moment. Whenever you make one decision, say you've got a farm. You've got a farm and you're planting crops and you're growing it, and you're making money from that farm. But you also have the skills to go and get another job. So you could do that other job, maybe earn $100,000 a year doing that other job. But if you work your farm, you could make $200,000 a year. So you've got to think, the opportunity cost of doing that farm is that lost potential revenue you can earn there because you're going to risk it on the farm for potential of a greater return. So opportunity cost, people need to think about it. I've been doing all these videos the last couple of days about solar panels, and people are going, oh, it's great, making a return. But you've got to think about it. Say you spend $9,000 on panels and it takes 5 years to pay back. Well, the opportunity cost of that is what else could you invest that money in? What if you had invested in gold? You could have made good money. What if you had invested in Bitcoin? You went crazy. Okay. Or something much more conservative. What if you have a mortgage and you put it in an offset account for that time? You could have been making, 3% return on that over that period of time. So the opportunity cost needs to be taken into account whenever you're making a decision or an investment, similar to risk assessment. Similar to the fact that they've shut down the entire economy now to save a few people or to extend the lives of some people? What's the opportunity cost there? Has that been considered? So we'll jump back to this about the gold. I'm going off topic, but I always tend to.
Think about this, that the government was able, that the dividends we paid to the government allowed them to do whatever they were going to do without having to borrow at a rate of around 5 or 6%. So I leave the compounding of that to you.
They still borrowed anyway.
But when you do that calculus, then indeed the decision is not quite so dramatic as the way you just...
Maybe the government wouldn't have pissed the money away on things that weren't very useful. Maybe they would have been a bit more frugal with their spending. So, I mean, there's all these what-ifs. I mean...
The way you just framed it.
So do I take it that no Reserve Bank takes draws from...
Sorry, I can't quite hear, Andrew.
Do I take it that there is no lessons that the Reserve Bank has drawn from that episode then?
I mean, the idea is always to sell an asset at its highest price. This is indeed a good thing to try and aim for, I think.
Aren't these meant to be the economic geniuses that are managing our economy like a finely tuned machine with just pinpoint precision interventions to manipulate us all for the greater good, comrade? This is why I prefer the free market. Because people stuff up.
Trying to predict the future of gold prices, and maybe a more sensible decision would have been to turn around and then take all those proceeds and invest them in Apple shares. And we possibly would have even earned a higher rate of return. But I suppose my point there is the future is indeed uncertain, particularly about future asset price movements. And hindsight is always the greatest investor. That is one lesson that one can always draw from such calculations.
Perhaps I could make one final point. The Reserve Bank is not an investment bank. We don't hold a portfolio of assets to try and kind of make the highest return, and we're not speculating on the prices of assets. We're holding these assets in the national interest. And the judgment we made back in the 1990s that was holding large stocks of gold in our vaults, probably not in the national interest. We're better off converting those gold holdings to foreign currency, because we need foreign currency for policy purposes, occasionally intervening in the foreign exchange market in the national interest. Not very often, but sometimes we want the capability to do that. And generating a flow of income to the government, which holding US Treasuries, as Guy said, has done. So, from maximising the value of our assets, if that was our objective, I accept the criticism. But from a public policy perspective, I think it was the right decision.
All right, thanks, Chair. Other questions at their time later.
Okay, thank you, Deputy Chair, and I take...
There you are. Well, what do you all think about that? Do you think Australia is going to head towards... well, I can't see a gold-backed currency appearing, at least from the backing of the Reserve Bank, at any time soon here in Australia. What do you all think? Do you think it was a good decision, to allow them to have the policy opportunities that they do? And do you think the government would have used those dividends wisely? I mean, even if they had held onto the money now, we all know what the government would have done with it. As always, guys, thanks for watching. Let me know your thoughts and opinions in the comments down below. Please like, share, subscribe to the channel. If you're a fan and want to support the content I create here, there are a few ways you can. You can join the channel on YouTube or Patreon. You can support us using our affiliate links at Amazon, eBay, Independent Reserve, or Kucoin. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us all via PayPal. Take care, have a great day, and I will see you all in the next episode. Bye for now.